Hello everyone. Uh, I'm recording this video for GSTR 9C, which is the GST audit report for the taxpayer, those who have the turnover exceeding 2 crores. Before we start with this, there's the first confusion that who is covered under this or not. Like, suppose if I have 4 offices and one of them has a turnover more than 2 crores, others do not have the turnover exceeding 2 crores. So, in that scenario, whether I'm supposed to get the audit done for all the places or just for the location where it is 2 crores. I have the format with me. It clarifies that the audit has to be done on GST basis. Okay, so it clearly says that instruction, there's a table number 5A, which talks about the turnover as per audited annual financial statement shall be declared. There may be cases where multiple GST and state-wise registration exist under the same PAN. This is common for persons entitled with multiple presence will have to internally derive their GST wise turnover and declare the same here, which clearly says that if my turnover of a particular GST is more than 2 crores, I have to declare that in my GST 9C, and accordingly my account would be audited. That means the audit under GST would be GST based, it will not be company based. If for the purpose of registration, aggregate turnover is 20 lakhs, which covers pan India aggregate turnover. But here, for the purpose of GST, for the audit, it does not say so. It says for the GST. Okay. Now let's come to what GSTR 9C is. It has 5 points and 16 tables. First point is the basic point, which talks about the details of the taxpayer. Then we have point number 2. It talks about the unbilled and the advances, all those things. Your tax liability, it basically works out your tax liability as far as your balance sheet is concerned, as far as your GST returns is concerned. Then we have point 3. It talks about reconciliation of the tax paid, right? Then we have point 4. It is the reconciliation of ITC. And then last is point 5, which is your recommendation as an auditor. Now let's go through the points one by one and the tables. The table, the point number 1 is basically, it covers the table from 1 to 4. It is the basic details of what the name of the taxpayer, GST, the turnover, period for which you are filing, and all those things. Then comes the point number 2. It has the table 5. Table 5 is talking about the various turnovers, various aspects on which the liability could be arised. It talks about unbilled revenue, it talks about the advances, all those things are mentioned under here. Let's read first point. First A is turnover including exports. We are declaring the turnover as per our balance sheet, which is 5A. 5B talks about is unbilled revenue at the beginning of the financial year. Right? If there is any unbilled revenue at the beginning of the financial year, that has to be declared here, because that revenue would be added to my tax liability as far as the transition provisions are concerned. Okay, then unadjusted advances, deemed supply as per Schedule 1, credit notes issued after the end of the financial year but reflected in the annual return. That means if there's any credit note which I have issued after 31st of March 2018, I need to reflect those credit notes in this particular return. So I need to be very particular. See, the fundamental is that the supply which I am making, उसकी valuation को आपको पूरा यहाँ पर declare करना है. Be it your unbilled, be it your because what happens is, let's say if I talk about income tax, you're following the accrual basis of accounting. You might not, it might not be a supply, it might not be a taxable event as far as the income tax is concerned, but for GST it might be a supply. Okay, the time of supply would have been this. For example, you have received an advance So in case of services you have received in advance, for income tax purposes, I can even accrue it. I can do it, take it for the next year that this amount has been received in advance. But for as far as GST is concerned, that amount is to supply, which was liable to pay GST. So the time of supply will have a very crucial role as far as the table point number 2 is concerned, table 5 is concerned. So all the details regarding your this financial statement, your annual billed and unbilled amount advances have to be declared, credit notes have to be declared in this table 5A. Then if there is any unreconciled, पहली बात तो मैं आपको बताऊं, रिटर्न जो हमारा ऑडिट फॉर्मेट है, all the tables have a table beneath it. It says any unreconciled amount. That unreconciled amount has to be explained. As an auditor, I have to explain why this amount has not been covered above. Okay. Then we come to reconciliation of tax paid, which is your point number 3. It covers basically the reconciliation of the tax which you have paid, and not only the tax you have paid, you have to declare minutely as to what the tax you have paid under reverse charge and what the tax you have paid under forward charge, and the proper calculations will follow. So including your interest, late fees, penalties, and everything has to be shown there. So table 9 is talking about the taxes you have paid, and this table will be auto populated. This will be taken from your returns which you have filed from your ledger, cash ledger, and it will be also taken from your annual return. So what you are declaring in your annual return would be mentioned manually, whereas what you have shown in your GST returns during that particular July to March would be auto populated, and then it will be reconciled. If there is any difference in the tax paid, that has to be declared. And I'll tell you, the tax paid difference could be only on 2 grounds. Either I have on my liability ground or on my ITC ground. So both of them has to be reconciled, and in the respective tables I have to make that amendment. Then we come to table number 11. It talks about additional amount payable but not paid. If the auditor feels that there was some amount which was liable to be paid but it has not been paid, it has to be declared in table 11. यहाँ पर the role of the notification, the rate change would come. We have to actually determine that at what particular time what rate was applicable, and whether the taxpayer has paid according to that rate or not. So see, when we say GST audit, it is not a VAT audit. It is a comprehensive audit. It includes the complete act, from your schedules, from your all the sections, everything is covered in this. Okay. Now coming to the ITC reconciliation. ITC reconciliation is in table 12. It covers various items like the ITC declared in my financial statement, then ITC which I have availed on transition, my trans 1, and any other ITC which was there which is related to the subsequent year. All those have to be mentioned here, and then my annual return, whatever ITC I have declared in my annual return, that will also go here. So the reconciliation of ITC would be mentioned in table 12, and this reconciliation is not enough because you have to see the provisions as far as the 16 is concerned, section 16(4), that whether there is a disallowance on account of 180 days, or whether there is no non-payment, or if the discounts have been given, whether that has been added or not. So all these provisions, your valuations would come into it, and your ITC provisions, rule 42, 43, whether the reversal has been done or not. So everything has to be considered, and the reasons have to be sought out. The more important is the reasons have to be sought out in your return, which is GSTR 9C. Then table 14 is very interesting. Table 14, it contains all the provisions, all the your profit and loss items. आपके प्रॉफिट एंड लॉस के अंदर क्या क्या आइटम आ रही हैं, वो सारी की सारी यहाँ पर आपको टेबल 14 के अंदर दिखाना है. फ्रॉम योर परचेजेस, फ्रेट, power, fuel, rent, insurance, royalties, everything has to be covered. And then you have to tell what is the amount of ITC on those particular expenses you have claiming. So that means I would need to make two P&Ls. One would be for considering my financial statement. Another would be for considering whether I am eligible for the ITC or not, considering 17.5 and the blocked credits and the rules which are there. So that this table can be fulfilled. Or I'll tell you, it is going up till Q clause, MNOPQ clause, and there it says last any other expense. After a complete list of the items, they are saying any other expense, which means that the full P&L has to be reported in my reconciliation for ITC. It says value, then amount of ITC on that particular expenditure, and amount of eligible ITC availed. That means I have to tell what was the ITC, what was ineligible, and what was the eligible amount. So I have to work out on each of the expense which I'm showing, and then I have to tell that whether it was eligible or not. That was table number 14. And then obviously 15 is the reconciliation, and then 16 is the tax on account of unreconciled ITC. If there is some ITC which is unreconciled as far as your financial statement and your GSTR 9 is concerned, I have to pay, I have to give the reasons, and I have to declare as an auditor that these are the amount which are liable to be paid. Okay. Then comes the point 5, which is very interesting. Point 5, it is talking about that any unreconciled balance. आपने ऑडिट कर लिया, सब कुछ कर लिया, लेकिन उसके बावजूद आपको लगता है कि कोई चीज़ ऐसी रह गई जिस पे कोई पर्टिकुलर टैक्स जमा होना था, किसी रेट पर जमा होना था, तो वो आपको पॉइंट 5 में डिक्लेयर करना है. I mean, are you understanding the burden? Are you understanding the implications which a auditor is going to face? So, when we say 0.5, I'm not saying that it is going to be very easy. You have to go through, you have to check all the invoices from July 17 to March 18 to come to at this point that whether the tax is supposed to be paid or not, whether the taxpayer has discharged the liability or not. Then it has certain columns at the later in 0.5 which says erroneous refund claimed, outstanding demand not settled, and others please specify. That means looking at the audit return format, I cannot say that this is a very simple format. It includes each and every minute details, and the one who knows about the GST Act would only be able to do the needful. But otherwise, I would rather say that GST 9C is very, very exhaustive. It looks like 5-page, 6-page audit format, but it is not. I'll calculate 2, 3, 4, 5, 6-page format. So it's not that easy. It has 16 tables. And what is worrying for me is that each and every details which have not even taken care of in GSTR 2 or 3 because that was suspended has to be worked out in order to submit this annual audit report. And I'll tell you, there's annual audit report, and the last it says, verification, I hereby solemnly affirm and declare that the information given here above is true and correct to the best of my knowledge and belief, and nothing has been concealed. That means I'm not concealing anything, right? And you have to sign this, auditor is signing this. And thereafter, there's a verification. There's a part B to this particular audit format, and there I'm giving a certification in cases where the reconciliation is drawn up by the person who has conducted the audit. That means part B can be given up where the person has not conducted the audit, but it has been done by somebody else. So the certification can be done by someone else also. Okay, and there's a part 2. It says certification cases where the reconciliation statement is drawn up by a person other than the person who has conducted the audit of the accounts. So part 2 वो हो गया जहाँ पर the auditor and the person who is giving the certification are different. So part 1 says the person who is conducting the audit is supposed to give the certification, and what certification I'm giving here is we have examined the balance sheet, P&L, cash flow, and based upon the audit we report that the said registered person has maintained the books of accounts records and document as required by IGST, CGST, SGST Act and the rules notification made issued thereunder. So it is a big problem. That means from your invoice number to your stock register to all the details, everything has to be proper. Because if it is not proper, I'll not be able to certify this. And you can understand the gravity that invoices with all the particulars as per the rules have to be maintained. If there is any of the any of the points which have been missed in the invoice, or there's some issue with the numbering, or the debit note, credit notes have not been issued properly, or there are any procedural lapse, I have to declare all those in my certification, because it's asking for that I have maintained all the records, documents as required by CGST, SGST and IGST Act, and has not maintained the following records. I have to even give the details of the records not maintained by them. So that has to be declared. Then it says there's a point 4. The document required to be furnished under section 35(5) of the CGST Act and reconciliation statement required to be furnished in 44(2) the CGST Act is annexed in form GSTR 9C. So I have to give the details. My 9C, my annual return will become the annexure to the certification which I am doing in form of 9C. And then particularly I have to give any other qualification I have with respect to the audit, GST audit I've done. So the point in this video which I'm making here is that it is not going to be very easy GST audit. It's going to be very complicated. You have to do with your July 17 to March 18 data in order to come out with the fair results and give the fair declarations, because the responsibility has been fixed on the cost accountant and the chartered accountant who is signing it. So you have to be very sure as to what you are signing, and please make sure that you have checked all the records before you go ahead. Thank you.